I'll just give you an opening volley on Tesla. Like, what's up with that?
Well, the stock is.
Yeah, it is. Right back to where it always goes.
Yeah. And I will say that Tesla is and remains one of our biggest and our best short positions.
Awesome.
I think there was some speculation on social media about that yesterday. So for anybody watching, we're still bears. Look, this stock has been in a trading range for about 5 years now.
Yeah.
And it's funny. I always try to tell people that at below 200, everybody thinks the company is about imminently to go bankrupt, including Elon. Let's point out that he earlier in 2019 he talked about the company being in financial trouble, and then very famously in the spring of 18 he said they were weeks away from insolvency. So we're not making that up, right? But I try to just point out to people that the company has had enough liquidity, even when the stock price was nosediving, that they probably weren't imminently going bankrupt, as a lot of bears on social media were prematurely spiking the ball. On the other hand, at $350, $360, and being taken out at $420, this company is an auto OEM, and it is trading at 6 to 7 times where all the other auto OEMs. I posted something just a little while ago, just showing just how much Tesla looks like the other auto OEMs.
Amazing.
In terms of margins, and except for valuation. And the rest of the auto OEMs globally trade in an amazingly tight band of 0.5 times total enterprise value to revenues. And it's been like that forever. It's why auto stocks really don't perform a lot, because it's a capital-intensive industry, and you get a valuation of 50 cents on the dollar of every dollar of capital you raise, right? It's a problem.
Yeah.
and also uniquely, both on a mean and median basis, global auto OEMs trade at a little bit under 5 times enterprise value to EBITDA. If you use both of those metrics, either or, with Tesla's numbers, they have about 25 billion in revenues. They have about $15 billion in net debt, negative working capital, long-term liabilities, and preferred minority interest. They have, on a best basis, the best quarter times 4, EBITDA of $3 billion, give or take. It's less than that on the latest 12-month basis. All of those metrics, you run them through the global valuation model for an auto company, and you get a stock price that is, interestingly, worthless. It's zero. And so what you have with the stock at 350, 360, is simply the market's view on all of the future brilliant products that are going to come out of here at amazing margins, because they're just not doing it. I think trailing 12 months operating income, including sale of tax credits, is under $200 million at Tesla.
It's terrible.
The company has raised equity and net debt $20 billion in its life. So it has taken $20 billion from investors to get you here. And there's no return on the business. Now, will there be 1 million robo-taxis next year? Well, there better be, right? I mean, we can talk about all these future products, because on just the core business of making automobiles, this company is not worth anywhere close to the total enterprise value of 70 plus billion, whatever it is, and should be trading, of course, much, much lower. And so the problem, I think, with Tesla is that Tesla was correctly early in this. They made an amazing car with the Model S. I've always said that. The problem is the rest of the world was slow, but is catching up.
Has got it.
And you now got Porsche with the Taycan, which is an amazing car, right? And increasingly now you're going to have very good manufacturers in that mid-price sector, which are going to be right at the Model 3. One of the most interesting things I think people ignored on the third quarter conference call, well, 2 interesting things that I want to highlight that are important for the future valuation of the company, is that the company acknowledged that their Model 3 demand in North America is plateauing at 45,000 units a quarter. That's really important, because you run that through the model of how many cars they sell globally of S, X, and 3, US versus the rest of the globe. You can start to get your arms around what the product profile looks like at best case. Number two, interestingly, they said that gross margins for the cars they're going to manufacture / assemble in Shanghai are going to be no better than they are in Fremont. So why the hell are you doing it? Why, what's the point, really? Given the massive capacity and production capability it's in China. Mm-hmm. So there's a lot of head scratchers here. But I think the reality about Tesla is that it's about the stock, not the profitability of the company. Mm-hmm. And this CEO, as we know, is very promotional. And sometimes it works for him, and sometimes it works against him. And that's what we've seen for the past sort of 4 or 5 years.
Yeah, promotional would be probably the kindest word I thought that could come out of your mouth in describing him. And that's very, I mean, that's gentlemanly of you.
I want to also just point out, everybody sort of talks about Elon and the Bears, and everybody conveniently forgets that the Bears are already 1-0 here, right? Because a lot of us were short Solar City, which was going to 0. He took it off our hands at 20. Most of the shorts were short at multiples of 20. And he used Tesla shareholder money. Now, admittedly, conflicted Tesla shareholders voted 80-some% for the deal. So, God bless. Mm-hmm. But that stock was headed to 0, and if you read the depositions in the Solar City lawsuit, you will see very clearly that the companies thought this thing was going to hit the wall. Mm-hmm. The bonds were yielding over 20% when they announced the deal. And so, this is, I will say that the Bears can already say, they've already won one against Mr. Musk. So we're in round 2 now.
And round 2 is going to include round 1, to be clear. It's not like this has gone away. Could there be a not so funny irony to him that's actually what grabs him and takes him back under the rug from a
there's a lot of debt that came on because of Solar City connected to the solar panel leases. And the problem with the solar leasing model, and there's still some companies that trade publicly that still do this, is that you own the panels, right? It's an asset on your books, and the residents pay you a monthly lease payment, but you've got to maintain them, and you've got to. And in many cases, one of the things we like to look for in companies is where the assets are actually liabilities. Mm-hmm. And in some of the cases of solar panel leases, I think that might be the case. And so, there was a lot of net debt taken on in the Solar City deal that I don't think is economic.
I mean, there's a lot of things that aren't economic when it comes to him. What do you think about the chiding of you and David Einhorn? Like, we're talking about you guys will get things right, you'll get things wrong, so does everybody else in this business. Yeah. But talk about picking a punching partner. I mean, he's picking 2 of the sharpest minds that are left when it comes to actually starting with, like you said, starting with layer 1 of the onion. Yeah. Do you think that there's an irony in that?
Yeah. Heard worse from better.
Right.
But I'm just saying that it comes with the territory. If you're a bear, a short seller, and you're public on something, you're gonna get lots of arrows. I mean, I'm a big boy, and so I've been around this track a few times, no pun intended. And I got the scars to show it. And we're not right all the time. We know that. That's why we have a portfolio. But one of the things that we do, and I know David does from time to time, is we show our work. And we'll tell you if we are going to go public on an idea, and it's usually a small minority of our positions. Yeah. But we'll let you know why, and we certainly let our clients know why, what our thought process is, why we think that 2 + 2 is not 5, how it fits into valuation parameters, what are the risks, and look, if we're right, we're right. If we're not, we're not. But it's hopefully not for lack of work.
No, the work part's interesting. I'm surprised I've not been. I'm a nobody. I guess that's why. But I mean, we publish all of our work, and it's been accurate. I mean, in terms of
I've seen it.
Tesla demand tracking, Tesla used car pricing. I mean, all these things have happened.
Yep.
They're truths. You know, and so is the fact that
insurance costs.
I mean, it's not no irony either that we started with this short as a bad manufacturer. Yep. We didn't start with like a bad vision or a bad tent.
What's fascinating, one of the things we've noticed to that, and right to that argument about this story, is that people who are actual automotive analysts were the ones on the sell side.
Yeah.
Were the ones who were the most skeptical.
Yeah.
Right? Because they toured the plant and they detailed and they saw some of the stuff that the CEO was saying was just craziness, nonsense. Mm-hmm. And it was the solar analysts or the tech analysts or whatever who are still to this day, consuming large amounts of the Kool-Aid. And I think that that's an interesting dichotomy. And yet this is, and the thing I posted on social media a little while ago, this is very clearly a car company, an auto OEM. It looks like an auto OEM, it talks like an auto OEM, and it walks like an auto OEM.
What do your students say when you use this as a case study?
So when I asked them to keep an eye on Tesla for
Keep an eye on
keep an eye for my fraud class, it's funny because I'll say, well, this semester why don't we monitor news at Tesla, and maybe a year ago I did Bitcoin. China's an evergreen kind of story, and I always, among MBA students, I always get this quizzical look when I say Tesla. Why would we be monitoring that? And then I get a quite different set of responses at the end of class from my students who have gone through the fraud models and whatever, and they're asking me quite different questions. They're like, why is this allowed to go on?
Mr. Chanos, if Elon Musk was in the studio with you right now, what would you say to him?
I would ask him a lot of the questions I think that my good friend David Einhorn asked him. We were puzzled both in the third quarter of last year and third quarter of this year of what looked to be supplier changes and arrangements. In fact, in the 10Q of this year's third quarter, they actually now put a table in for the first time and made reference of language of agreements entered into at the end of the quarter. So clearly the lawyers at Tesla are worried about something that happened at the end of the third quarter where they put this into the notes. And I'd like to quantify how much did that impact the gross margins. That would be one thing. The second thing I would like to talk to him about is why are all your executives leaving? I mean, it is kind of stunning to us that this company just can't keep senior executives. And why is it they get there and leave, and they leave lavish stock option packages on the table? And really, what possibly could they be seeing that you're not disclosing? Whether it's CFOs, chief accounting officers. I guess that's a talk about similar sets and patterns of behavior. That's not dissimilar from shorts you've made a lot of money on. That kind of behavior. Well, when we see, so a dead giveaway, when you see stock sales, and by the way, senior executives and board members are selling lots of stock through 10b5 plans at Tesla. But when you see that coupled with executive departures, that's almost always a red flag. And so I want to know. And then I'd really want to ask him about these constant pronouncements of full self-driving, a million robo-taxis, things that cross-country trips by full self-driving cars. The semi that was supposed to be out this year, it was announced 2 years ago. I mean, why? What is to be gained by this if you just keep missing these great pronouncements?
Well, you can pronounce anything, and as long as people in the moment are willing to believe it, you just got to hope they forgot that you said it.